You're joining part 2 of our latest episode of Crypto Clarified. Previously, we tackled some of the recent headlines around crypto markets. Today, we'll be moving on to tackle key investor questions and educational topics, as well as debunking some of the popular misconceptions around cryptocurrencies in our Crypto Myth Buster session. For today's educational topic, we're going to be talking about staking. My name's Benjamin Dean. I'm director in WisdomTree's digital assets team, and I'm joined by my co-host, Camilla Russo, who's founder of Defiant Media, and our special guest, Drew Robinson, head of Institutional Sales EMEA at Coinbase.
Today we've been discussing the Luna UST incident last week, try and put it into context in a broader market sell-off and think about opportunities in the near future. Cam, you mentioned the infinite machine in passing just before. I know in the last month you've had some interesting news there. I want to share it with listeners quickly. I think it's definitely one of the things that is a noteworthy piece of information this month.
Thank you for bringing it up. One of the things to look forward to will be watching the movie of the Infinite Machine come to the theaters in the next 2 years or so. There will be a movie based on my book on the Infinite Machine. It's a book on the history of Ethereum, kind of the people side of the story. So not the tech or trading side, but like how Vitalik inspired a group of hackers and idealists to join him in building Ethereum, the challenges they faced, and so on.
If listeners are interested in the history of Ethereum, they should pick up the Infinite Machine as background, because the topic we're going to talk about next is directly related to that history. Since basically the beginning of the roadmap, and Cami, you could correct me if I'm wrong, the idea was for the Ethereum network to transition from a proof of work consensus mechanism to a proof of stake consensus mechanism. And the listeners might be familiar with this idea of proof of work. It's how Bitcoin mining happenings you solve complex math problems with graphics cards. And if you manage to do that effectively with enough computing power, you're rewarded with Bitcoin. There's an alternate way in which to run a network, and that is proof of stake. Drew, I know that your Coinbase already offers staking on Ethereum on the Beacon chain. You want to give any quick thoughts about proof of stake, how you folks think about it there? Is it a big deal when this transition happens? It has been delayed from June to maybe September. You give us a quick background, then maybe Cami, I'll ask you to jump in and share some thoughts. But Drew, the floor is yours.
Yeah, no, it's obviously it's second to Bitcoin, the largest asset, and definitely the one that we have the most institutional interest. Like again, I'll preface that I come from the institutional side of the business, and so there has been a ton of demand, and I would say interest probably picked up late last year about staking, and when will the transition to proof of stake consensus for Ethereum take place. I think that for institutional clients, been the biggest biggest challenge that they face now is that again, like they can't just allocate LP or client if they're kind of a B2C play. They can't just have client capital locked up, without any kind of end in sight in terms of when this transition may occur. So I think that like what a lot of our clients are trying to figure out is how can they kind of time the market correctly so that they can start to stake and earn rewards kind of right at that inflection point before the transition occurs where the rewards are likely to be highest. And so right now we just have a lot of people that are kind of waiting on the sidelines, not so much because like Coinbase doesn't support it. We're actually in the process of adding it to custody right now for our institutional clients that are papered against our Coinbase Custody International entity out of Ireland, right? And so there's been some kind of the segments like where it might be VC or kind of longer term that are okay doing it, but most are kind of just waiting for this to go live to be able to offer to their end clients or their LPs. And then I think that what we're doing in the background and thinking about ways where we can perhaps assist clients in the interim to have more liquidity while being able to earn some types of rewards or staking revenue from participating in the Beacon chain launch. But yeah, for me and from my perspective, I think that this is one of the massive potential catalysts for the back end or kind of H2 when we think about cyclical headwinds potentially easing in the market. This transition is a massive catalyst to kind of propel the market the next leg higher.
Thanks for that. Cami, you've cataloged the history of Ethereum. I flagged that this has been a long time coming. The merge has been delayed. I know investors are thinking about staking rewards and what it means for price and whatnot, but I sometimes get questions from folks and they ask, like, why is this happening? Why is this technical change going to happen? Can you give people a little bit of background for like what thinking is behind this, why such a big change might be made, and then maybe we can think about the consequences of the change when it happens?
Sure. So Ethereum proof of stake, yeah, has been in the works pretty much since the beginning of Ethereum, since it was launched in 2015. Maybe kind of the more kind of serious research began in 2016. But it's been a long time coming, and the reason to go this route and not proof of work is because it offers greater potentially decentralization, and because it's more energy efficient. It doesn't require nearly as much energy as proof of work does. So proof of stake, instead of having node operators put energy into securing the network and competing for confirming transactions, validators instead are putting ETH deposits into the chain, and nodes that have more ETH staked have a greater chance of confirming transactions. So you're putting capital instead of energy to secure the network. And what that means is that in theory, it would lower the barriers of entry to node operators, because you don't need kind of all the heavy infrastructure that a proof of work mining operation needs. You just need to buy Ether and the minimal hardware required to actually run Ethereum nodes, but not kind of these like graphics cards and fans and like just like a lot of physical equipment needed, which prices a lot of people out. So that's kind of one aspect of it. It's supposed to make Ethereum more decentralized because it increases access for more people to be able to run their own node. Then the other aspect, again, is kind of the energy efficiency. You're not consuming energy to secure the network. You're putting capital. So it's like Ethereum proof of stake is supposed to consume like 99% less of the energy that Ethereum proof of work does. There's a misconception that proof of stake in itself would improve Ethereum scaling, but that's not the case. Proof of stake doesn't improve scaling, but the path to Ethereum 2.0, which has been rebranded to just like purely Ethereum, that's what is supposed to include increased scaling. So first step is proof of stake, and then next step is sharding. And sharding is kind of the piece that breaks kind of these mini blockchains onto the main chain and allows for like faster transaction times and execution. So that's kind of just like one point to clear up there.
Indeed. Some folks don't realize that the Ethereum network evolves over time. So the Ethereum network we talk about now is totally different to the one from 3 years ago. And as you say, this is one piece of a continuing evolutionary process. It doesn't solve the scalability issue, as you pointed out, but it is an important step towards what's hoped to be a more centralized network. The reduced energy consumption is an interesting thing there. Certainly from some of the investors I speak to, they get concerned about that. We'll see are there any risks about the merge not going smoothly that you've heard of?
I mean, of course, there's risk. Like this has never been done before. A huge blockchain in production, live with billions of dollars staked and in volume and traded, and hundreds of applications and millions of users. All of that, migrating into this new base layer, into the beacon chain. It's a huge undertaking, and it's why you know these things are take time, and keep getting delayed. So right now, what's happening is that the merge is being tested on different test networks, and that's supposed to, or that's meant to give more assurances that this is going well. And I think Ethereum developers have opted for a more kind of conservative approach to shipping. It's very kind of consensus based, research based, testing based, and that means timelines and deadlines are missed. But I think it's probably worth it because there's just a lot at stake. No pun intended.
Exactly. It takes time. I'm always a fan of the Bitcoin blockchain. The Bitcoin network does not evolve this much. Like its stability is part of its allure in a way. It's not going to change terribly. So the Ethereum network is going through some big changes, and yeah, you don't want to rush through it. You don't want to put out network in production. You don't want to mess up a process like that. But keep an eye on that process and that roadmap, listeners, because around September, we think there might be a chance for that merge to happen. It is going to have implications on the investment case for Ethereum. It's going to have some implications on how the network works, and potentially could facilitate the kind of new use cases that might provide opportunities for applications and projects built on Ethereum in the coming years. We're coming up on time, but we do have a listener question I'm going to direct towards Drew, but for that, of course, Cami, if you want to have a stab at it as well, you're more than welcome. The question reads, how long do you believe the extreme volatility of the cryptocurrency market will carry on before it gets to the level where investment managers will be able to allocate it into their portfolios more easily? Drew?
Yeah, I would say that like we've already reached that point, right? Kind of despite some of the volatility. I think that if you take a step back and zoom out, the issue when we kind of had the last bull run, the barrier for institutional adoption then was really the infrastructure, right? Like the custody solutions weren't there, the execution venues weren't like up to snuff. There wasn't the ability from a financing perspective, like as it really relates to the bilateral lending. The futures market was a lot less mature than it is now, right? So that was kind of the first hurdle that we had the last time we had this rally. Now, kind of looking back to the rally of 2020, I would say that like I have like a high conviction view that crypto has started to penetrate the institutional client segment, and that we're already seeing this happen. And almost like no matter how conservative the institution is, like I think that most have come to the realization that it'll be part of their future, and that's regardless if you're an asset manager such as you guys, Ben, or pension funds or sovereign wealth funds. That doesn't mean that they're all necessarily here today, but they're doing the work, and either there's some type of direct allocation or indirect allocation at the equity level or kind of at the alternative investment manager level. I also think that to answer that question, not all institutions are going to participate in the space, or the way that they engage with the space is going to look kind of similar or one for one. So it might not just be direct ownership of some crypto asset. It could be, that they're engaged in via stable coins. It could be that they're engaged in via smart contracts or NFTs even, or even just financing, right? It came out the other day that Coinbase and Goldman Sachs did a loan where we borrowed dollars and collateralized it using Bitcoin. So I think there's many different ways that financial institutions may have exposure to the crypto ecosystem and have that in their portfolios.
Nice. Cami, I think I know what you're going to say, and you already touched on it perhaps, if I'm right. Are there any thoughts you'd like to share in response to the question around volatility?
I totally agree with Drew. I think kind of the time for investors to add crypto to their portfolios is here. Of course, there's different kind of degrees and you know amounts regard depending on the amount of risk that each investor wants to take. But the infrastructure is here, the volume is here, and I think it's crypto has been around for enough time for us to say for certain that it's not going anywhere, and it's an industry and sector that has potential to keep growing. I mean, what we're seeing is just more innovation and more growth coming, regardless of kind of these short-term volatility cycles. So I think there's ways to protect against volatility. There's more sophisticated tools in the market now. There's options and even stable coins that we've mentioned that can kind of help you take some of the more volatile assets off the table. So I think there's different alternatives available that there just wasn't before. And for me, it's again just like looking at this as a very much a long-term investment. Like, do you think crypto will continue to grow? Do you think it'll still be around? Do you think it's a worthwhile, at least if not revolutionary, innovation? Then yeah, I think everyone should own at least a little bit.
Nice. We're coming right up on time. Indeed, when we chat with institutional investors, the suggestion is, look, you don't think it's going away and you know there's trial and error and it's volatile, allocate 1% that you rebalance for things that are winning, you cut out the things that are losing and take a medium to long-term perspective. That way you manage your risk and you ride the volatility. You get the asymmetric upside from a space that has tons of opportunity. That's the end of the show. Cami, founder of Defiant Media, thank you for joining as always. It's a pleasure to see you.
Yeah, thank you. This was great.
And Drew, I hope to have you on again in a future show. I hope you enjoyed your time with us.
No, I definitely did. Pleasure to be here. And yeah, we'd love to be back sometime in the future and chat again with both of you.
Excellent. Well, I hope that listeners have found today's podcast useful and informative. If you'd like to submit a question that you'd like us to tackle in a future episode, or you've got a myth that you want us to bust, to find out more information, also just email us at cryptoclarified@wisdomtree.com. Thank you again for listening to us today. We hope you all have a good day.